Okay, Chair.
Yes, okay.
Yeah, ready to go. Paul, you're on mute.
Sorry about that. A bit flustered.
Okay. It's all right. It's all right. No worries.
Right. Thank you very much for this attending this meeting. We've got two guests in with us today who are going to be asking some questions to start the meeting off, and you've all got the agenda, which
you've frozen.
Paul, we've lost you. I don't know if you can hear us, but it might be better if you turned your video off and just tried to manage with sound.
Back.
sorry, I dropped out again then, I think.
Yes, you did. Yeah, you back in there okay now to continue?
Yeah. Would it be worth my while seeing if I can find a different reception, or it's all right now, is it?
You're okay,
You're okay,
now, Paul. You might want to try it without video and see if that helps.
Okay, I'll go to without video except when I'm speaking. Thank you. Mark. Right, can we have the first speaker then?
Oh, Chair, you got just a few regular things to go through before you get to the speakers.
Oh, sorry.
That's okay.
Right, okay. Do you want to take through with the agenda?
Yeah, sure. Well, you were on the introduction, and so it's just reminders for everyone to keep background noise to a minimum, to only speak one person at a time and not speak over others. Mute your microphones when you're not speaking, and then unmute them when the chair invites you to speak. You must indicate, if you can, to speak by using the chat facility on Zoom by typing MIS. Should the committee need to take any votes in order to expedite the results, we will assume a majority position. And just a reminder that the votes taken today will need to be ratified by the Court meeting of the committee, which is set to take place next Friday, the 17th. And so now we head into apologies and absences. I've received apologies from John Cato, Mike Rumpf, and councillors Shern, May, and Stevenson McGall. And now, do we have any declarations of interest from anybody? No, doesn't look like it. Okay, we'll carry on. There is no urgent business. And so this is the point where we reach our public statements. And if it's okay with everybody, I'd like to ask Tony Jones if he's here to make his statement to you now.
Thank you very much. I hope everyone can hear me. You have my prepared statement, but I just want to briefly read that and refer to that. My name is Tony Jones. I'm a Bristol resident, and my statement relates to your item 11 on your agenda for today's meeting. I wish to express my concern and disappointment that following the recent COP26 meeting in Glasgow, the Pension Partnership Update Report, the first you've had since COP26, does not include specific recommendations for action by the committee that reflect the seriousness of the situation we face following COP26. According to the Climate Change Committee, that's the statutory body which advises the UK government on climate issues, in its recent report, it rightly puts the focus on, COP26 rightly puts the focus on the 2020s as the critical decade for accelerating climate action. the CCC is clear that a focus on the net zero target in the absence of specific, detailed and immediate action to reduce greenhouse gas emissions puts the target and all of us at risk from the rapidly escalating climate crisis. As individuals, we all have a part to play in the action needed for the rapid reduction in greenhouse gas emissions. Financial institutions, such as the Avon Pension Fund, can bring enormous leverage to bear and, following COP26, have to step up to ensure that they are leading the way out of investment in fossil fuels, not by 2050, but by the end of this critical decade. Why, in this first update report following COP26, has none of this information and the need for urgent action been placed before our elected representatives on your committee? Thank you very much.
Thank you very much. Does anyone have any questions for Tony? I'm not seeing anyone ask for any questions. Thank you very much for your statement, Tony. I'm not on video at the moment, in case you're wondering, because I'm having an internet connection, so I've got to reduce my bandwidth. But thank you very much for your statement, and we will get a response to you on what we're doing so that you can be assured that we are taking this very seriously. Thank you. Can we have the next speaker, please? Jackie Walkden.
Hello. Mine follows on from Tony's statement, really, and it arises out of looking at some of the documentation that was sent in preparation for this meeting. And looking at it, you can see that a lot of Brunel's focus is on aiming for well below, what they say is well below 2 degrees, but it's often just referred to as below 2 degrees. And what they omit is actually the Paris Agreement aims for 1.5 degrees, and by aiming for 1.5, it should actually be below 1.5 degrees in order for the world to be safe. Not above 1.5. We're already at over 1 degree of warming, and at the moment the effects that the effects of that on the climate are well in advance of what the scientists thought was going to happen at this particular stage of warming. If we think that we can go to 2 degrees, we're going to be in serious trouble, because it looks as though the models are. So my feeling is, looking at Brunel's proposals, there's a certain degree of complacency. And also, I'm very worried about what I think is greening and what is renewable resources, particularly when you look at things like the mixed fuel facility in Slough. That's an incinerator. It's based on burning waste. And to produce that sort of waste, you have to use fossil fuels. And in fact, you're wasting fossil fuels because you're producing things which are going to be burned. So for the sake of the planet and for the sake of pension fund holders, there have to be genuinely green solutions. And they really need to, Brunel and Avon, all its partnership, need to heed the warning of the International Energy Agency report on net zero by 2050, which says there should be no new fossil fuel projects after 2021. By investing in fossil fuel companies, you are ensuring that there will be new reserves sought and developed after 2021. So I think the pension companies have to stop accepting weak long-term goals from fossil fuel companies and ensure that new projects don't go ahead, and that local government funds accept that local government funds need to be divested from fossil fuels without delay. So the question is, what will the fund now do to up its commitment when we know it needs to be protecting stakeholders from climate breakdown? Thank you.
Thank you very much. Does anyone have any questions for Jacqueline on that? We will get a full reply to your question, Jacqueline, but can I assure you that the Brunel group and Avon are in the forefront of the climate agenda in terms of pension committees, particularly local government pension committees. It might not be as fast as you want, but we are in the leading group. Thank you very much for your time and your question, and we will get a full answer to you. Thank you. You're welcome to stay and watch the rest of the meeting. Okay, item 7, minutes of the 24th September and the 4th of October, both the public and exempt. Are they a true record, and may I confirm them as a correct record?
Chair, happy to propose that they are a correct record.
Any seconder? Charles, thank you very much. So unless anyone wants to vote against it, I'm going to assume the majority position is that we confirm those as a true record. Is that correct? I'm seeing no gainsay or anything in the chat. And also, I noticed that John Finch is also having internet problems this afternoon as well. Okay, thank you very much. We've confirmed those as records then. Item 8.
Chair,
Pension board minutes.
Chair, can I just say you skipped item 6?
Did I?
Yeah.
Right.
Just items from yeah.
Chair,
Items from
5, 6,
councillors.
2 public statements. Pardon?
Chair, this is Councillor Steve Pearce here. I apologise for my late arrival. I've been at the Local Authority Pension Fund Forum conference and my train was slightly delayed. I've only just got through the front door, but I'm happy to be with you now.
Okay, thank you. What do you think I've missed, Tony?
Item 6 is items from councillors and co-opted members, which is usually nothing, but just to remind you.
Okay, sorry. Are there any items from councillors or co-opted members? No. Okay, item 8, pension board minutes, 30th of November. The purpose of this item is to notify the Pensions Committee of the latest local draft pension board minutes. Have we got any questions on those minutes? Right, I've got no chat or indications, so I'm proposing that we notify those minutes. Is anyone not happy to notify them? Just let me know. Otherwise, I'm assuming the majority position is to note them. Okay, thanks very much. Item 9, Interim Actuarial Valuation 2021. Can I invite Julia Grace and Liz Woodyard to present the report, please?
Yeah. Thanks, Chair. I'll just present this very quickly because we've got the actuary here who can answer any questions. So this report just summarises the outcome of the interim valuation. There's no decisions for committee to be making at this stage. A workshop was held, and I think most of you were at it on the 1st of December, where the actuary discussed the outcome in full detail and the implications that we're already thinking about in terms of the 2022 valuation. We've also, just to remind everyone, had informal meetings with the larger employers in the scheme, the unitary bodies and the higher and further education bodies, and just to give them an idea of the scale of any potential change so it can inform their budget processes. even though the new rates aren't effective until 2023. We don't intend to go through the presentation, which is in Appendix I. It's an exempt appendix, as this presentation was used in the workshop. The actuary is here today to take any questions, and although the presentation is an exempt, we are happy to take questions in public, and we're only going to exempt if we need to. So I'll pass over to Paul, who can, I think, just introduce with a very brief summary of the key points and then take some questions. Thank you.
Thanks, Liz. Thanks, Chair. So Liz has summarised what we've looked at. So I'll just cover off the sort of key messages that have come out of the interim review and the direction of travel. So what we've looked at is updated data at 31 March 2021, but we've updated the funding position to the end of August. Probably if we looked at it now, it would be broadly similar anyway, so there's not a great deal of difference. And what we've looked at really is about where the market position is, what the outlook for returns and in particular inflation is, and why that's important is that affects the liabilities and therefore the costs. And I think probably it's fair to say at the time of the interim review, we think that we would see a sort of lower return outlook and higher inflation than at the valuation, which means I would have to adjust my assumptions, which has implications for what the outcome of next year's valuation will be. We will keep that under review, and there's quite a bit of uncertainty out there. But generally what we've seen is actually quite an improvement in the position. So if we looked at the interim review and I adjusted my discount rate in line with that outlook, we'd be seeing a funding level of about 99%, which is an improvement on the 94 the last valuation, so a significantly improved position. And in part that's to do with the risk management framework. And I estimated as part of the interim review that the risk management framework has improved the position by about the order of 200 million in terms of deficit, which is positive. So overall, what we were seeing on average for the fund is a really improvement in the funding position, but because of the changed investment outlook, an increase in the on cost or the future service rate. But overall, in terms of total contributions, all things being equal, you'd see a theoretical average reduction. However, one of the things that Liz alluded to is we've been in discussion with employers, and really part of the debate would be not necessarily whether we reduce contributions, but how we keep them stable at the same time. And that's going to be a key issue for debate as part of next year's valuation, because the last thing we want to do is change contributions and only put them up again at the next valuation, so in 2025. So there's much to do. And in terms of timetable, we will, of course, be doing quite a bit of work in terms of where the outlook is, but we'll be coming back to committee with a draft funding strategy statement June next year, which would then go out to consultation with employers to be finalised at the September 2022 committee meeting to start the process of assessing the rate. So in summary, positive outcome, but there is still a lot of uncertainty out there, which we are going to have to be cognizant of when we're doing the valuation next year. So that's all I wanted to say, very brief overview. Happy to take any questions, Chair.
Chair, you're just on mute, I'm afraid.
Sorry, William New, please speak.
Thank you. I don't have a question really. I just want to, on behalf of the higher education and further education employers, to say the interim valuation for individual employers we know it is only an estimate at this stage, but it's really helpful because all of us are preparing the budget for 22-23. So I just want to thank for this interim valuation exercise, which is very helpful for us all.
Okay, thank you very much. I've got no one else indicating, and I've got no one else in the chat asking to put a question.
Chair,
Is that
sorry, I've
correct?
just got my hand up, Chair. I don't know whether I should be doing that or not, but
Oh, sorry. Who's speak? Right. Okay.
it's
please
Shirley.
speak.
Shirley, thank you.
Hi, Shirley.
I'll put it in the chat next time, but thank you.
Yeah.
My question was just about the some of the assumptions we've made, and I understand that we've put an allowance into the interim valuation and the previous valuation to take account of the McLeod judgment, and I just wondered how reassured we should be that that's a prudent assumption that we're making there.
That's a good question. We don't, for McLeod, have the final outcome yet, but we do have a very good idea of the direction of travel, and we won't know the precise outcome until the regulations are in play, and that's going to be, well, probably summer of next year, if in all reality, because what has to happen is that the primary legislation or the new Public Service Pensions Act has to come in by March this year, and then each scheme's regulations will be put in place. We have asked the question about we're expecting any material shift in the position, and we aren't. So I'm confident we have the right, or in the right region of estimate. There could be some changes, but I would not expect it to be material. I think the materiality in McLeod is whether we don't get the legislation in play by March next year, because if the primary registration is not in play by March next year, then it means the cost will extend past 31 March 2022. So if anything, the biggest risk to increased costs and misestimate is actually it goes on for longer than we expect, so that incurs more costs, Shirley. So that I'm not worried about what we've done in terms of our estimates. I'm more worried about that actually the legislation isn't in place quick enough.
But we've done what we can, haven't we?
Yeah, absolutely.
Which is reassuring. And just a second question, I think this is more for Liz really. I know that we're already talking to the larger employers about the potential changes to contributions, but do we give all employers some kind of notice that contributions might change, particularly in terms of any salary assumptions that they may make next year?
We don't generally go out with with too specific a message, because once it actually gets down to each of the employers individually, the changes could be quite different. And I think William will support that in terms of what the higher and the further education bodies saw. And their outcomes were quite different, whereas the unitaries were maybe more homogenous in that sense. So I think that it's very difficult. And what you can then do is give a misleading message. We have actually asked Paul's team to give us a bit more understanding of the implications for the academies, because they're much less funded in general, and another bunch of bodies, and I can't remember who they are. And we have been keeping an eye on the bodies that might be looking to exit over the next few years, etc. So we are keeping a close eye on everything, and where we can, we're telling people, but we'd have to do a full valuation to be able to tell every employer and
Understand.
idea.
Understand.
So yes, and I think that the other key thing is that for lots of them, like the academies, the LGPS costs are much smaller part of their budget, whereas for some of our bigger employers, obviously, it's a very significant part of their payroll budget. So again, there's that aspect as well that we need to take into consideration. But you are right. Traditionally, up to a few valuations ago, interim valuations, we would have gone out with a general message, but that can now be so misleading. I don't think it's necessarily helpful to the budgeting process.
No, you've got to get the balance right, haven't you, really? So thank you.
Okay. Any more questions? I've got no one in. Pauline Gordon.
Unmuting. Hi, just on the back of that question, one of the assumptions in the valuation is that we assume quite low salary growth for the next few years. Obviously that keeps contribution down. It was just really to understand how we're monitoring that with the backdrop of, you know, potentially quite strong inflation growth over the next 2 years.
It's a very good question. Well, what we've seen is actually, when we looked at the interim review, pay growth was higher than we expected. And that's for the reasons that we probably have all heard in terms of just general inflation, but also labour shortages pushing up pay across the board. So one of the key things, and this is what was highlighted in the initial discussions with employers, is what are the expectations given those pressures? And we will adjust the assumptions to match up to that. And that's one area where, you know, we're very well, you know, very grateful of employer input as well as the sort of general thing. So we will be modifying that to try and get it as close as possible. What I would say is it's probably one of the lesser important assumptions over time, because it only affects benefits prior to 2014, which are diminishing. So it's the other assumptions are more important, but it is quite crucial that we get it right for different employer cohorts. So absolutely right to ask that question.
Okay, thank you very much, Paul. Any further questions? I've got no one in the chat. I'm just scrolling through and no one's waving at me. So can we have someone propose that we note the recommendations in the paper?
Happy to do that, Chair.
And second?
Seconded.
Okay, thank you, Pauline. I'm going to assume the position is that we're all in favour. So if you're not in favour, please indicate or put something in the chat. Right, that's unanimous as far as I can see. Thank you very much. Thank you, Paul. Item 10, Annual Responsible Investment Report. Can I ask Nathan Rawlinson to present the report, please?
Yes, thank you, Chair. This year's annual RI report, which is Appendix I, covers a slightly longer time period than usual, as we wanted to sort of capture all of the outcomes of the equity allocation review undertaken earlier this year. So members are going to be asked at the meeting next week to approve the 7 RI priorities listed in section 7 of the report and clear both the RI report and the TCFD report for publication on the website. Just given this is the first year we've produced an RI report alongside both a TCFD report and a stewardship statement, you'll note there is some overlap in the content. So we'll look to rationalise the reporting a bit next year while sort of continuing to comply with the various requirements. So that's really all I had to say. I mean, I'd welcome any questions, comments or feedback on the report itself. And then Mercer have an RI peer analysis paper to take you through, which can be found at Appendix Ii afterwards. Thank you, Chair.
Okay. Do I have any questions for the officers on the paper? Charles. You're muted, Charles.
Yeah, I was just finding the right button, Chair. Sorry. Yes, I've got a couple of questions, really. Firstly, to be honest with you, in the light of what one of our speakers said this morning, just to note the emphasis that the report puts on the investment in Slough, and to know whether or not we do have any professional comment on that. So that would be one point. And the second 2 questions, I'm not sure whether they're covered by what's going to follow on, which comes in on page 106 under the draft report, where in the draft report, we refer to the voting provider as Hermes, yet in the paper it's referred to as EOS. Now, I know it's one and the same, but I'd like to think we had a degree of continuity in the way we operate. So perhaps we could have a comment there. And then on page 116, I think it's a typo in the Appendix 2, because it reads, while cement is not the most environmental friendly to produce. So I think that's a draft document, that typo will need addressing. Thank you, Chair.
Thank you. Nathan, can you answer those?
Yeah, absolutely. Thank you, Charles, for pointing those out. Yeah, and as you quite rightly say, Hermes and EOS are one and the same. So we'll make sure that that company is referred to consistently throughout the report when it does get published, and we'll correct that typo at Appendix 2 as well. In terms of the Slough investment, I mean, really all I can say on that is that it's a bioenergy asset. I would need to refer back to some Brunel documentation to give you a sense of how much we have invested in that asset, and I'm happy to sort of bring that back to you after this meeting if that would be helpful.
Thank you.
Any further questions? Shirley Marsh. Oh, was that?
Thank
was
you.
That from the last one, or was that new?
No, it's
Shirley,
a new
yeah.
one. Thank you.
Yeah.
Thank you, Chair. And I just wanted to say that I think this is a really good, comprehensive report, and easy to read as well for the membership. Just in terms of the other statement we had at the beginning of the meeting, should we be referencing the recent COP26 meeting in terms of, not that we should have done any work on the back of that, but just maybe referencing that has happened and we may need to review the direction?
I can come back on that one too. So, I mean, we do refer to COP26 in the exec summary, and sort of it is scattered throughout the report, but I think maybe we could sharpen up a bit in terms of talking about the direct implications of COP26 on sort of institutional investors. And
I think so, given that once it's published, it's already happened a few months ago, isn't it? So I think people would expect at least some reference to the impact, although I recognise we can't go into the detail of it, and we are making good progress towards the right goal. So thank you.
Noted. Thanks, Shirley.
Shirley, I completely agree with you. I think our reports, our heading reports at least, should make reference to the COP26 and give some indication about where people can find how we're responding to the challenges within the more detailed reports. So I completely agree with you, and I'll work with officers to make sure that point is covered adequately. Steve Pearce.
Yes, thank you, Chair. Struggling with buttons again at this end. An excellent report, as they usually are. Interesting to read this in conjunction, actually, which is what I did last night, with the investment performance report. Lots of commonality in behavior of the fund in those regards. So all in all, excellent stuff. Really pleased to see this. Thank you.
Thank you. I've got no one else in the chat.
Chair, can I just
can't
Chair,
see anyone waving at me. Tony, yeah. Tony,
can I just come in, Chair? If you recall, we did have quite a good structured meeting at the Oversight Board and discussion about COP26, and one of the the things which was raised by there was the communication from Brunel on all of the things that we're doing, and being able to sort of structure that in a way where we could disseminate that more easily for all of the pension funds, because as the Avon Pension Fund is been trying to up its communication, so we need to make sure we bring all the Brunel good work into that as well. So I think the COP26 response we did have a presentation on, but we are going to be working with Brunel to make sure we've got some much more meatier information to be able to publish on our website about all the good things that's going on, because we're doing an awful lot, and we really sell ourselves short at the moment.
Thank you, Tony. Any other comments? I can't see anyone waving.
Sorry, Chair, to clarify what I was saying earlier, I'm following on from what Tony has said, actually. A lot of the graphical information and stuff that's included in the investment performance report is useful material to communicate what's going on with the annual responsible investment report. So there is a lot of useful connection to make between the two. And I and other colleagues have for years now been banging on about the need to improve the communication work that we do, to disseminate the work we do, to disseminate the information about the work that we do, both to members and to those that would challenge this board on its response to climate change. And it's nice to see that we've upped our game in this regard. And this maybe eliminates the need for me to chime in on item 12 on the agenda now.
Okay, thank you very much, Steve. I've got no one else in the chat. I can't see anyone waving at me. So can someone move?
Sorry, it's Liz. It's the last thing before we move the resolutions was that we've got an analysis by Mercer's to go through, which is also very interesting if Josh can bring out some of the key points.
Sure. Yeah.
Can we go through it?
Yeah, happy to do that. Thank you, Chair. So hopefully everybody's able to see the slides in front of them that we provided. But the main sort of summary of the framework through which we've evaluated our clients is on page 3 of our deck. And what we did was we evaluated 650 Mercer clients covering both local authority, private sector, and defined benefit and defined contribution, covering 75 data points under 21 different categories, all around responsible investment, ESG integration, climate change, etc. And we split the framework into 4 main categories. So beliefs. So are beliefs documented and established? Policy, the extent to which those beliefs are translated into policies, for example, net zero targets. Then process. So are there processes in place to actually turn those policies into tangible action? And then finally, the portfolio. So the beliefs, policy, and processes, are they resulting in a portfolio that reflects those beliefs? So as I say, that's the framework by which we've evaluated our clients. And then the score is on slide 5. And you'll be pleased to note that the Avon Pension Fund scored an A+, out of a possible A++ being the maximum, compared to a size average of B+ and an LGPS average of B+ as well. And on the following slide, page 6, you can see there just the distribution of those ratings amongst our client base. So clearly the Avon Pension Fund is at the forefront. From what we see across the industry, we really would consider the pension fund to be a leader on ESG and responsible investment. We see there at the bottom of slide 6, scored in the top 3% of all of our clients. So really positive, and that's really testament to the hard work and forward thinking from the committee and the panel and the office as well. So as I say, been really, really pleased to see that. Slide 7 just goes into a little bit more detail as to how the fund scored in those various categories. So for example, on beliefs, there's clearly ESG beliefs in place. They've been documented. they're very much available, a number of initiatives. In terms of potential development areas, if you did want to look at further improvements in this area, there are things that you could consider, for example, wider ESG issues rather than necessarily only climate change. Not to say that you don't already have that, but that could be an area to focus on more. For example, looking at the UN Sustainable Development Goals as a framework. In terms of policy, again, the standalone RI policy is a clear, strong positive there, and that's something that we see a lot more in the LGPS space, and the private sector is very much trying to catch up with the local government schemes leading the way. Clearly plenty of disclosures there in your policies against the TCFD framework, net zero targets. We say lots and lots of good work gone on there. Potential areas that you could look at developing is updating policies, thinking about perhaps maybe slightly more at the margins, but the fund's own operational impact. For example, the day-to-day operations of the pension fund itself, rather than just necessarily its investments. But as I say, an A+ rating is already indicative that you're doing a whole lot there. The process point, again, ESG, we consider to be fully integrated into your investment strategy. The annual responsible investment report, the carbon footprint of the equity portfolio has been undertaken regularly. Potential areas of development there would be, as the panel will be aware, we did some climate change trajectory analysis for the equity portfolio, showing how you might go about getting to net zero by 2050 and plotting out interim targets along the way. One thing that we've been speaking to the officers about is considering broadening that to other asset classes, so corporate bonds, infrastructure, things like that over time as more data becomes available within those asset classes. So again, it's something you could look to develop, but it's actually already sort of going on in the background. And then finally, the portfolio. I guess the majority of your equities are invested in sustainable, low carbon, climate transition type funds with Brunel, as you'll know, and also the dedicated allocation to renewable infrastructure. So all of that showing that your portfolio is pretty well aligned with your beliefs and your policies. One to look at for the future is just to consider, keep it on the agenda. Are there other ways of incorporating ESG and sustainable investment into the wider portfolio? Although clearly that's something to be done in conjunction with Brunel. That was the main things I wanted to bring out of that report. I mean, some of those sort of potential things to consider outlined on slide 8, which we've been talking to the officers about. Wasn't going to go into a lot of detail on those unless there's any comments or questions.
I've got no comments in chat. William was waving. William.
Yeah, just a very quick question, Josh. We are by no means the top. Are you able to say who came top on that analysis of Mercer's client and what did they do? Presumably they've done all the development areas that you mentioned.
Yeah, sure. So I think I'm not sure whether I'm sure it's public knowledge anyway, but I would say the Interim agency would be scored very highly, which many of you will be aware of. I'm not aware of other names that are scored more highly than Avon. And as I say, that's why I'm saying we're comfortable to say that Avon are very much at the forefront.
Okay.
There may be some other DB private sector schemes in there with more of a sort of ESG mission and focus as well. But from an LGPS perspective, certainly amongst the top cohort for sure.
Thank you.
I've got no one else waving at me.
I've just got a chair.
Chat. Oh, sorry. Yes, Shirley.
Yeah, thank you. Thanks, Chair. Josh, I was just looking at the climate disclosures and wondering whether organisations or pension schemes are looking to do issue member-friendly reports in the future. I know it's early days for many of the schemes, but is that something that you're seeing?
It's not something that we do yet. I think, as you say, because it's early days, a lot of the whoever's administering the pension fund is getting to grips with the regulations and the requirements themselves. And there's a huge amount of work being done in the industry with consultants and the investment managers to make sure that we can get the necessary metrics and data and put them into first of all, the format that's compliant with legislation. I'm sure in time, as things develop, there will be improvements in how we make this more member friendly, but certainly that's not something we're seeing yet.
It just feels like a real win, doesn't it? That if we could easily simplify it so that members got the key information, we'll be getting over this communication issue that is always a dilemma for us. So thank you.
Thank you, Shirley. I've got no one else in chat. I've got no one else waving at me. So can someone move something so that we can just record that we've approved the paper?
Chair, happy to propose that we recommend to the meeting next week that we approve recommendations 2.1, 2.2 and 2.3.
Thank you very much. Is that seconded?
That's seconded
William
by me.
Lou seconded it. William Lou seconded it. Thank you very much. And Shirley's also seconding it. Okay. Again, I'm going to assume the default position is that we approve. Does anyone wish to abstain or vote against? So I'm recording that as a unanimous approval. Okay, thank you very much. Can we move to item 11, which is the Brunel Pension Partnership update? Can I ask Liz to present?
Thank you, Chair. Again, this is just a routine report that we talk, where we just update you on how Brunel are delivering in terms of what they need to under the contract. The all investment aspects are actually covered in report 12, item 12, the investment performance monitoring report, because we are now post-transition and they are the investment manager. There was nothing particularly to raise with committee, but I'm aware that the BOB meeting was after the papers went out. So it was last week. And I didn't know whether either Paul or Tony wanted to add any more, other than you've already mentioned about the COP26 and general comms around climate change. I didn't know if there was anything else that you wanted to raise. Happy to take any questions on the exempt appendice, and if necessary, we can go into exemption, but we don't have to if it's not a particularly sensitive issue, question that you want to ask.
So do Tony or Paul wish to add anything to Liz's statement?
Chair, there was nothing to raise. We already picked up the communications issue, and as soon as we get some slides off Brunel, we'll circulate them round to committee members. The budget, which we normally would have tackled at the November meeting, has been sort of deferred to January, so there'll be a joint meeting with shareholders in January to go through the Brunel budget proposals for the following year. But apart from that, it was business as usual.
Thank you. I've got no one. Richard Orton. You need to unmute, Richard.
You mentioned COP26 was discussed at the Brunel Oversight Board at their meeting the 2nd of December. Could you outline what those discussions were?
Sure. So Brunel were represented at COP26, and Faith Ward, who you probably all met at some of these meetings, was giving a sort of resume of all the engagement that she'd had with various organisations and what the sort of main topics of the agendas were going through. So she was just simply went through that with the Oversight Board. As I said, I'll circulate that slide pack to members of the committee when it comes through.
Okay, thank you very much. I've got no one else indicating to chat. I've got no one waving at me. So, can someone move a motion that we can
Chair,
accept?
happy to note the recommendations.
And that's seconded. Charles has seconded it. Thank you very much. And Shirley seconded it. I'm going to again assume the default position is that we all approve. If anyone doesn't approve, can they please put something in the chat? There's nothing going into chat, so that's another unanimous decision. Thank you very much. Can we move to item 12, please? Investment performance and strategy monitoring, September 30th, ending September 30th. Nathan, please.
So, Chair, I don't know if you saw the email from Liz Woodyard earlier. I think the intention is to move this to later in the agenda. I think it's this item.
Okay.
So that Steve Turner can join us.
Okay, no problem.
Thank you, Chair.
Just remind me that we need to come back, won't you?
Yeah, we'll do. Yeah.
That is correct. I did receive an email to that. Thank you very much for reminding me. So we're going to move that to a later on in the agenda, item 12. Please don't let me forget about it. Item 13, update on legislation. Jeff Cleek.
Thank you, Chair. Good afternoon, everybody. A regulatory update has been included in the papers for noting. This gives you the position on key issues up to mid-November. The report timetable summarises the main updates since the last meeting of the committee, together with any actions undertaken by the fund. There have been no significant changes since the last report, but there are a couple of points to note. There is an expectation that a new consultation on the redevelopments on the exit payment cap, the 95k cap, will come through early in 2022. Each public sector scheme will be consulted with separately this time, so we may end up with some inconsistencies across the public sector pension schemes in the final outcomes. Just a little bit on McLeod. So as Paul mentioned earlier, from the actuary's viewpoint, the McLeod judgment is making its way through Parliament at the moment. It's very light on LGPS, but the likelihood is that the detail will come out in the detailed committee stage of the motion as it moves through. Again, it's not necessarily going to be a one-size-fits-all across the public sector. And just a bit of a footnote on McLeod and the impact in other areas. You'll be aware that Avon Pension Fund administers the firefighter pension scheme on behalf of Avon Fire and Rescue. In 2020, the Home Office issued an informal guidance note that firefighter cases could be processed in advance of McLeod under what's called immediate detriment. In October of this year, the LGA and the FBU issued or produced a memorandum of understanding and a framework agreement for fire authorities to adopt. This actually went a little bit further than what the Home Office immediate detriment guidance stated. However, on the 29th of November, the Home Office actually removed or withdrew the informal guidance. So there's a little bit of a bit of an issue there now that the Fire Authority has adopted something that the Home Office has now removed the guidance of. This is really because working into the detail of McLeod as it moves through Parliament, some of the complexities are really coming through now. This is going to be quite a complex matter to resolve and to plot through for funds and administrators at the end of the day. Not so much impact on LGPS. As potentially on some of the public sector schemes, fire in particular. Just another update on McLeod Sargent and the cost control mechanism. So the cost cap was unpaused because it had been paused because of the McLeod challenge. The message coming through was there had been no impact on the previous valuations, but this is now being challenged again by the FBU and the BMA. So obviously on the basis that there would be an expectation that member benefits should have been improved. But so we'll see how that transpires. They may eventually have an impact on the LGPS also. That's really all I had to say. Obviously, it does say in the paper that the MHCLG has now been renamed to the DLUHC, the Department for Levelling Up Housing and Communities, or I think you could be easier to remember if you think of it as the Department for Leeds United and Hull City. So anyway, happy to take any questions.
Right, thank you very much for that easy way to remember it. I don't quite know what the connection of Leeds and Hull is to the rest of us, but I'm sure you'll all remember it now. Any questions? I've got nothing coming up in the chat. I can't see anyone waving at me. So we got, therefore, no questions further on that. We've all read the report. Can I have a motion, please?
Happy to propose we note the report and the appalling judge.
Yes. Seconded, please.
Seconded.
Charles has seconded it, and I heard someone else coming in there quickly as well. Okay, so again, I'm assuming that we're all supported. If you want to abstain or vote against, please put something in the chat. There's nothing going in the chat, so that is again unanimous. Thank you very much. Item 14, Pension Fund Administration, Jeff Pleak.
Yes, thank you, Chair. So this is the quarterly admin report for noting again. And for this meeting particularly, we will also be including a short communications presentation, which Jason Morrell, our comms and marketing manager, will be presenting a little later. But first of all, I'll go through the main body of the report. So the focus is on the admin performance, employer data quality and progress against the service plan and related project work. Generally, at the moment, the administration work continues to build. Recruitment, training and development is ongoing. We've actually recruited 17 new staff members over the course of the last sort of 18 months or so. And also 15 staff within the department have actually moved into new posts. So there's been quite a fair bit of movement and recruitment ongoing with training and development taking place as well. So at the same time, work is ongoing across most of our key projects. I think generally speaking, we're mostly green on some of our service plan key projects. One or two have fallen behind slightly, but we are sort of focusing on those key projects where they are absolutely necessary, and also maintaining business as usual at the same time. So yeah, if I can go through very briefly the appendices attached to the report. So Appendix 1 covers performance. Now, generally speaking, there has been an improvement across admin performance over the last quarter. So whilst workload is still increasing, we are actually seeing some better sort of results, and we are beginning, particularly around some of the critical processes, we are beginning to go back the right way, because I think you recall the last meeting, we were kind of hovering between sort of amber red in some of our critical areas, but the corner has kind of been turned there, and I think we are working the right way now. Appendix 2, which is the Mercer annual summary of employer data. This kind of is a sort of a summary document over the last 4 years, and pretty much shows that how we're working with our data and with our employers to improve the data that we hold for members. This is particularly important, really, for many of the smaller employers, because there's far more impact on employer liability. But the report itself clearly shows that it pinpoints areas where we can sort of target sort of employer data to kind of reduce liabilities more directly. I think over the 4-year period, we've reduced liabilities across all of our employers by about 30 million. And on the employer services team, which is Claire's team, they'll be working with that report in more detail over the coming months ahead of the next valuation to sort of improve that further. There are a number of we've also got just a summary there on some of the key projects on Appendix 3, just some of the key projects that we've been going through at the moment, just a little bit more detail on those, particularly around the address tracing project and McLeod as well. And then also there's the service plan update also included within the report. So just to kind of mention, I think there was within the report itself, I think it shows that the backlog project, which started off in October, following sort of the last meeting that we had, I think by mid-November, we'd cleared about sort of 30, sort of high 30, 39%. We're now up to 47% cleared now on that backlog. So that's working really well. And the member services team are really sort of clearing down those cases. I think as we go through them, we will get to the probably slightly more complex cases. But we have set ourselves 6 months to complete that. So we are on target there, and Anna's done a great job with the team there to move that forward. We've got some other major projects ongoing as well, particularly around improving our kind of our lever process through iConnect, trying to automate it as much as possible and make it less onerous and less labour intensive. So that's something that Claire and Anna are working on at the moment. And also we've recruited some resource to actually begin to kind of work towards our sort of customer service and improve that service going forward. There have been, just as I said earlier, there's been a little bit of a delay on one or two of the strategic projects on the service plan, but what we'll be doing as a management team is kind of getting together in the new year to kind of work through and plan our way to kind of rebase our sort of priorities and work through the sort of that and produce that to the committee when we get to March as part of the 3-year rolling service plan. The risk register has also been attached, and I think that's fairly self-explanatory. There's been a couple of additions or changes there. I'm happy to take questions on the paper as it stands before handing over to Jason for the presentation at this point.
So I think that's really good. I've got people coming in with a lot of questions here. I think that's really good news on the staffing. When I do my training with other pension authorities, staffing is a very serious issue to everyone. So I've got Charles and then Richard and then Shirley. So Charles, Richard, Shirley.
Thank you, Chairman. I think we've got to applaud all the commitment for the staff involved, because continuing to have to work under the conditions they are, it's very challenging, and I think we have to applaud everything that's been done. I just have a couple of questions, if I may. There's a reference to undertaking delivery of the IDF process, and to say that you've identified 5 officers to undertake that particular project. My concern is what will be the impact of taking those away from what they're currently doing to deal with that. So that's my first question. And the other question is on Appendix 1, on transfers in, where our performance on that looks disappointing, shall I say, at less than 10% objective. Really, because we are so far behind in dealing with those transfers in, do we backdate the work in financial terms for the individuals concerned?
Thank you, Charles. So to answer your first point, yes, when we've identified specific technical resource to deal with the immediate detriment framework that the fire authority are going to agree to, that potentially will have an impact on our own fund and business operations on the LGPS side. Until that starts, it's going to be difficult to know exactly what that impact's going to be, particularly as the cases that are going to be quite complex are the cases where members have already retired from the fire service, so they're going to be quite complex to work through. We've kind of, there are strict time frames set to deliver this, so there's a potential that we could be impacted for up to about 6 months. But until it starts, it's difficult to actually know how long these cases are going to take. But what our notice to the fire authority has been, if there is any impact, and we do have to think of maybe outsourcing work elsewhere potentially, then we'll be recharging that to the fire authority. But at the moment, it's difficult to actually quantify the timeframes around this because it hasn't started yet. To answer your point on the transfers, so transfers are very much sort of time frame driven, have relevant dates, etc., based on the date the transfer was actually produced. But there is a window. All members have a window of opportunity to investigate a transfer, and that is 12 months from they commence employment. So that won't change. So the members shouldn't be adversely impacted, even if the transfer is late, because we will still gear it to the relevant date being the start date of employment. So even if it does take longer, then transfers are guaranteed for 3 months. Generally speaking, although there are different types of transfer, obviously public sector and sort of transfers coming in from the private scheme are slightly different. But the relevant date for us is the key date, and that's the start date for the member. So as long as the member's applied within 12 months, then that will be the relevant date that we use for that, even if it's late in being actioned.
Okay, thanks very much.
Yeah, but what I would say, just to come back on that finally, sorry, Charles, is obviously that those figures there were up to the end of March. The backlog project started off in October. What I would hope to do is give the committee a full update on progress when we get to the March meeting.
Thank you, Richard.
Yeah, Charles has covered some of my question. I wanted to focus on transfers in as well. Is there an explanation why the performance has deteriorated from the last quarter of 2020? Looking at the figures, only 2% were within target. I understand what you mean about Jeff, that the members are not going to be disadvantaged. But can you help clarify about why those targets have gone so or downhill?
Yeah, certainly. Yeah, thank you very much, Richard. I mean, the regulator was quite clear at the beginning of the pandemic that the focus should be around paying benefits. So we've had to focus the attention of the team around retirements and death cases. Obviously, the regulator did remind all funds not to kind of forget its responsibilities around delivery on other aspects of the business operation as well. Unfortunately, we've had very much sort of staff turnover on the team. So I think that's been a major impact on not being able to kind of get on top of some of the less critical work. So as I say, that was the whole point in getting the project, backlog project put together, which we started in October to target the areas that weren't being kind of picked up. So it is disappointing to get to those low figures. But obviously, the idea now is to actually push that and get back towards amber green on delivery.
Thank you, Jeff, for that explanation. Hope it improves.
Thank you.
Okay, thank you. Shirley.
Chair, sorry, Shirley, can I just follow up on that particular point, Chair?
Oh, yeah, sure.
Okay, so just speaking from experience as an employer and looking at the staff, transfer also relies on the other pension scheme workings as well. So I just wonder, when do you start the clock really? Because doing transfer is not just even pension funds officers or the staff's working. You have to rely on the other pension scheme working as well. And the other point I noticed that Jeff, you mentioned that members got 1 year from their employment to do the transfer. I think that it is 1 year from joining the scheme to do the transfer. Yeah,
that's what I meant. Sorry,
yeah,
William, if I wasn't clear on.
Just for clarity, just in case the minutes is reflecting incorrectly. Thank you.
Okay, thank you, Shirley.
Thank you, and thanks, Jeff. And I also, it's good to see that we are making some progress on the backlogs for staff. I know there's some way to go, but we are making some good progress. My point was around the pensions dashboard, and I know that you flagged it as a project that is ongoing and it has started and has got a project plan. But the more I hear about the dashboard, the more I feel that it's going to take a significant amount of resource, both in terms of getting ready for it, but also dealing with issues once it's live. And it seems that the ball is rolling down the road and this is going to happen, and we haven't got any control over those timelines. So I am concerned about the resources when we've got that, and also in the cloud potentially happening at a similar time. Although we can't do much about it at the moment because some of it is unknown, I recognise that. Are we looking at the options that are available to us should we have issues with the resource implications?
Thank you, Shelley. Yes, I mean, from our point of view, we have only just sort of kind of put someone in place to kind of manage the project. So it's early days yet, and that person will be working quite widely with the software providers, as well as kind of being involved in various discussion groups. From an admin point of view, we're quite clear. I think that it is going to impact because once it's live, and it could go live anywhere between end of 2023 to 2025 potentially. I think the idea is that the public sector, or the various elements of public sector, won't go live until absolutely everything is in place. And everything has been tested to ensure it's fit for purpose as far as the framework that supports pension dashboard is concerned. Obviously, our job is to ensure that the data is fit for purpose and the member data is present and available to as widely and as much as possible to allow members to kind of view their various pension arrangements. I think the area that we've got to think about, and we haven't done so yet, but it's a little way off, but that is the resource in place to field the potentially thousands of calls that we're likely to get at the beginning once it's switched on, because you've got to kind of then go through a process to join people up and get them onto the platform. So I think that's some way we do need to consider how that's going to work, whether there'll be some form of automation around that as well. So I think we need to kind of understand exactly what support we'll get from software and sort of artificial intelligence around that kind of thing. But clearly there is going to be a need to ensure that we've got the right customer service resource in place and ready to take this, because within a couple of days it could kind of knock out member services team completely. We won't get any business as usual done. So we need to be quite clear in separating the duties out there and being prepared to kind of face the kind of massive tidal wave of pension dashboard it's going to bring. Yeah.
I mean, it's good that you've got it on the agenda. I think we just need to maybe keep a focus on the risk part of it as we go by. Obviously, we're not on our own here. Everyone's in a similar position, and hopefully we can all learn from each other and see where people are developing strategies to deal with it. So that should be helpful. So thank you.
Yeah, thank you, Sean. I think certainly collaborative working is going to be very important across this.
Yeah, yeah, absolutely.
Thanks.
Right. I've got no one else waving at me. I've got nothing in the chat. So we finished the debate and questions. Can someone move the recommendation? Charles, thank you very much. Can that be seconded?
Seconded.
Okay, thank you, Shirley and William. Right, again, I'm going to assume that if you disagree, either abstain or against, you'll put something in the chat and that everyone else is for it. I've got nothing coming in the chat, and so therefore I'm assuming that's unanimous as well. Thank you very much.
Chair, before we go on to the next point, Chair, can I just ask, because Jason was going to just deliver the presentation on communications, just to give the committee an update on where we are with comms.
Right, okay, yes, please, thank you.
Sorry, Jason.
Thanks, Jeff, thanks, Chair. I'll just share my screen. Good afternoon, everybody. My name's Jason Morrell. I'm the Communications and Marketing Manager for Avon Pension Fund, just in case you haven't met me. Hopefully you can all see just a few slides just to help walk you through our recent communication activity. Obviously, we've had a particular emphasis on ESG and the climate emergency. And this slide just gives you a timeline of what we've been doing over the last 18 months, going back to the spring of 2020. And we've messaged or communicated with our active and deferred and pension members. And in total, all those different newsletters have reached the figure of 300,000 so far. That's also been backed up by a dedicated web page on our members' website that brings together all the material that we've published, like the responsible investments reports and the animation, which I'll talk about later on. We've also been quite active with sending out press releases. This is the responses we had, or the articles we had generated through the recent FTSE Russell announcement back in October. And that was 7 national and 2 local news stories generated. Obviously, up into COP26, one of the biggest things we were doing was the climate emergency animation. And it's basically just an accessible way for people to view our climate emergency response and our future strategy for responsible investment. It's been distributed via LinkedIn, emails, the website, and staff newsletters in some of the local authorities. And as you can see over on the left-hand side, you've got the knowledge, which is in North Somerset's internal newsletter for members, their employees, and you can see that they did a special COP26 newsletter. On the left-hand side, on the right-hand side is the Bain's internal CEO staff update, which we appeared in twice. We've also been on social media platforms talking about the climate emergency animation in Bain's. They've got a Yammer site specially set up. Also, in the lead up to COP26, we produced a climate emergency ESG electronic magazine, and that basically set a timeline for our 20 years of ESG involvement. That was distributed again by LinkedIn, email, and the website. As you can see on this, is just a little bit of Google Analytics for the nerds out there. Basically, it just shows that when you discount the homepage and those 2 popular, always popular web pages, My Pension Online and Contact Us, the third most popular page is people go into the climate emergency web page, obviously to view the animation. We've also, last month, the closing date was for the 30th of November, we produced the ESG survey, which we emailed out to 41,000 emails, members, should say, and that was everyone we had an email address for. Closing date, as I said, was the 30th of November. I was pleasantly surprised at the number of people actually completed the survey. We're going through that at the moment. There's 3,765 completed surveys, about 9% of the people we emailed. And we hope to give those results back at the beginning of next year in the lead up to the next pension committee. And we've had sort of quite qualitative responses as well from 800 members have given their views as well. Also, we've produced a APF LinkedIn account. We see that as a major communication channel to reach scheme employers to help them with various issues. One of the first posts we made was obviously the climate emergency animation post, and that was the most successful post to date, and that was seen by 1,000 views. Moving away from ESG now, we're obviously very keen to get as many people signed up to MSS, our online pension portal. And last year, in the summer of 2021, we made ABS's annual benefit statements digitally available to deferred members first as a sort of test in the water. It was very successful. We emailed 9,000 deferred members who were signed up for MSS, 800 of which accessed their ABSs digitally, even though we were also posting them out in that first year. And we see that as a way to get all ABSs available digitally by the summer of 2022. And that will be obviously for active and deferred members. Just a sort of like a timeline of the sort of schematic really of the member journey as we see it, and those 3 key points where we can get more and more people to sign up for MSS, which hopefully should not only contribute to decreases in the amount of money we spend messaging people, but also speed up the process as well. And finally, we're not obviously always about external communications. We're obviously internal as well, and we've just recently launched a new staff newsletter, and we've got another one coming out before Christmas. Just basically, obviously, like it's been touched on before, with people working remotely, there's a lot of new people joining, so it's good to let people know a little bit of a pen pick of those new members, just so when they do meet them, they know a little bit more about them, because obviously everyone worked remotely, and now we're going to be working remotely a little bit more in the foreseeable future. It's just nice for everyone to get a little bit more of a feeling of sort of community. Just to point out, obviously, as Jess said, we had 16 new people join. One of those was Tom, and he's been instrumental in a lot of the stuff you see here, and to help me and Ben on a lot of the communication projects. So happy to take questions, and I'll stop sharing the screen.
Thank you. I've just got one. I think you said somewhere in that presentation you'd done a Yammer site. Did I mishear that?
Yeah, it's a sort of social.
What is a Yammer site?
It's a social media site which is internal to Baines, and it just basically is a sort of a community builds. You can talk to members of staff on there. So we just I got one of the members of Baines Sustainability Group to post about the climate emergency animation.
Yeah, I've been reading it, and the climate emergency stuff is good. Thank you very much. I've got Richard with the first question.
Okay.
Jason, in relation to the emails, you said you sent the survey out by emails.
Yeah.
Over 41,000 emails.
Yeah.
Was active and retired and deferred members, or was it only to active members?
No, what we first sent out to everyone we had who had MSS accounts, so that is active pensioners and deferred members, and also we had some emails from people who hadn't signed up for MSS yet, so we were able to send those emails out to them as well, which is going to help us to hopefully get them to sign up for MSS in future. So it was to basically everybody really, or samples of every single group.
Okay, I've noticed you only had under 10% back. Have you undertaken a follow-up to actually try and get more back?
Well, when I spoke to the person we have the email platform with, and she sort of said that 10% is usually the benchmark for any surveys, but we did send up follow-up emails to just trying to cajole them to complete the survey. So yeah, yes, Richard, it's we did send out the sort of follow-up reminders. So I was quite pleased actually, because it was compared to another LGPS scheme they did it. We had about 1,000 more responses. So won't mention their name, but yeah. So Richard, I was quite happy with it.
Richard, I must blame myself here. I'm one of the 90%, I'm afraid. Sorry about that, Jason. Shirley.
That's all right.
Thank you. Thanks, Chair. Jason, I think it's a great job that you're doing there. It's the comms are brilliant, and it is so hard now to get engaged members. So if we can use different ways of doing that, that's brilliant. Just in terms of the emails, are they personal emails that we're collating, or are they work emails?
Thanks, Shirley. They're a mixture of both, really. Obviously, it would be ideal if we had personal emails for everybody, because when they sort of become pensioners or when they become different, we can still track them. But some are work emails, so it's sort of a mixture of both. But obviously, we will try eventually to get everyone onto personal emails if that's possible.
Yeah, that's what I was going to say. I think that's a thought now, isn't it? To try and get the personal email at an early stage. Yeah, that's great. Thank you.
Yeah, surely they tend to never change really. I've probably got one my one at home is probably 20 years old probably.
Exactly, and especially with deferred population and addresses changing all the time. So, but if we're already collating some personal ones, that's brilliant. Thank you.
Right, I've got no one else wishing to ask Jason any questions or waving at me. Okay, so can we move on to the next item, which is the internal audit update, Jeff?
Thank you, Chair. Thank you. So this is, again, a report for noting. The internal audit findings were last presented to the Pension Committee in June 2019, and due to the pandemic, was not reported during 2020. The Internal Audit Service have carried out and reported on 5 audit reviews since June 2019, and the audit reports are attached at Appendix 1 to 5. For each of the 5 reports, the audit opinion has been recorded as an assurance level 4, which is good, and there were not any significant issues to bring to the committee's attention. So, happy to take any questions if there are any.
Any questions? I've got nothing in the chat. I've got no one waving at me. Just check the chat one more. So we've got no questions for you, Jeff. Thanks very much. Do we need to just note the paper then? Can someone move? All right, Shirley's moving it. William, was that you nodding for seconding? Okay. Again, I will just assume that we're all in favour of it, and if someone's abstaining or against, can they put something in the chat? There's nothing in the chat, so that's unanimous. Thank you very much, Jess. Item 16, budget and cash flow, David Richards.
Thanks, Chair. I'll do this because Dave's actually not in today. It's the quarterly budget monitoring report. It's for information only. There's no decisions to be made. We're currently forecast to be underspent, mainly due to salary, but salary underspends, although, as Jeff said, they're moving ahead quite rapidly with some appointments. The only other cost that's come in this year that wasn't budgeted at the beginning was for the newly formed funding and risk management group. We have a lot more meetings and a lot more reports, which have increased the cost. But that currently for this year, that cost is being met by an underspend elsewhere in the governance budget. If we have to commission more work between now and the end of the year on investment strategy, etc., we might well end up being over budgeted, but we still should be well within the overall budget due to the salary underspend. So the only other thing I was going to say, I was hoping to give you good news on the audit and signing off of the accounts, but unfortunately, we do have a meeting next week. The auditor is ready to sign off the Avon Pension Fund accounts, and there'll be an unqualified opinion, but not ready yet to sign off the council's accounts. So I think that will now move into the new year, I'm afraid, new calendar year. So we'll keep you abreast of that. But it is we have had to publish our annual report with a draft set of accounts because we have to publish our annual report by the 1st of December. So we have done that. So yes, unfortunately, I'll have to update you in March, and hopefully we'll have signed the accounts by then.
Okay, thank you very much. Do I have any questions? I've got nothing in the chat. I've got no one waving at me. So there are no questions. So can we just note the report? Can I have someone move that? So that's William to move it.
Happy to
and someone to second it. Okay,
yeah.
And Christando to second it. Thanks very much. Again, I will just assume that if you want to abstain or vote against it, you'll put something in the chat. Otherwise, I'm assuming we're all for it. I've got nothing in the chat, so that's unanimous again. Thank you very much. Can we move to item 17, work plans, Carolyn Morgan?
Well, hi, Chair, it's me again. Carolyn's actually ill today, so I'm doing this
Sorry
paper.
about that.
It's okay. So as well as the usual work plan and training plan for the year ahead, this report also contains details of a couple of other changes that we want the committee to note, but also to participate in. So firstly, we're going to start using Modern Gov more extensively. We intend to change the format of the committee meeting so that you actually get less information just for noting in the actual agenda pack, and so that the committee meetings themselves can focus more on papers where the committee are actually required to make decisions or to discuss strategic items of strategic importance. So to facilitate this change, we plan to use the library function within Modern Gov to store some of the monitoring reports, and those reports might actually then be able to be have a slightly different visual formatting. And so this means that reports and appendices will still be available for committee members to read, but won't be part of the formal packs. Any issues that need to be brought to committee will be brought to committee via a specific paper. So you will still get any issues brought to committee, and you can still talk about the information that's on the library at committee, but we just want to try and focus the discussion more on the strategic. So in order to access the Modern Gov library, all members will be required to have a private access to Modern Gov. I have to say, this is Carolyn's area of expertise, not mine. Our communications team, led by Jason, will be in contact with you all in January 2022 to set up the relevant access and provide any support or training required. We have asked, and I don't know who they are, but there's been a little group of committee members that have been looking and testing out what we've been putting on Modern Gov in the library. So we have done that part of work, and I think that the idea is that we will parallel run in the March meeting, but we do want people to try and adapt to this way of doing the committee meetings and accessing information. And it will evolve and develop, and we'll be very welcome to have feedback, because I think that'd be really important. I think we will formally, sort of like make sure that we review it after maybe a year of like a full cycle of meetings to make sure that it is actually meeting our requirements and your requirements. So that's the first thing. And then the second thing that I have to inform you about, which I'm sure you'll be absolutely delighted, but we've signed up to an online learning academy that Hymans have developed, which is in response to the Good Governance report. This Scheme Advisory Board, in response to good governance, they've put forward additional knowledge and skills requirements for all LGPS pension committees. I think Nick Weaver might still be on the line. He's the chair of the Pensions Board. The Pension Board have to undertake certain training. LGPS committee members do not. And we're just trying to make sure that you do have that same level of training to develop skills and knowledge. So we're going to be asking both committee and board members to undertake the training models from January 2020, and that the training models should complement either our agenda items. So for example, if we're doing an agenda item on the valuation, we'll ask you to go and refresh yourself with the valuation module, and also any other training that's been provided. I haven't tried it, but Carolyn has tried the training. She says it's very interactive. It's got a combination of video presentations, reading material, and also a short quiz at the end of each module, just for you to test your knowledge. There's no pass or fail. You're not asked to redo it or anything like that. So hopefully it will be a positive learning experience. And I will just tell you that all senior officers will also be doing this, undertaking this training. So you're not alone. I'll be doing it as well. So the fund has already arranged for Hymans to do a demonstration for us, I think on the 17th of December at 2 p.m. Invites have been sent out. It should only take about 30 minutes, but we will be recording it for those that can't attend, and also for people who want to go back later on when they start to do it and they want to have a refresher of how it all works and what the modules look like. So that's the plan. And I think it will be a very good addition to our governance structure, because we are again being forced to report more and more on what training and level of technical skills and knowledge the committee as a whole has, rather than necessarily at an individual level. So I'm happy to take any questions, as long as they're not technical.
I shall certainly be doing that, but I have to tell you, everyone, these online training courses are not as easy as they're made out to be by some people. I'm trying to do one for my scuba diving course, and there's one on partial pressures at depth that I just can't get through. I can't understand. I think there's something missing in the course, and I just can't get the right answer. So I need to be able to speak to a human being about it at some stage. But I'm looking forward to those extra courses. Right, so I've got Nick Weaver first.
Yeah, if I may just say that I fully appreciate some of the pension training stuff is absolutely gruesome, and I'm afraid the pension regulators toolkit comes to mind. But actually, I imagine the Hyman stuff and the material I've seen all the actuarial firms produce before will be excellent and will be very, very good. So actually, relatively, it should be very enjoyable and certainly very informative. So I'm hoping certainly all the board will be doing it, and I think we'll get a lot from it. And I think also members may recall a while back, in fact, Hyman's did a bit of a test to see what our knowledge was like. And actually, they were very, very astute questions to make sure we understood what was going on. So I'm sure that the training from that caliber of firm will be of a similar quality. So I honestly can't recommend it enough. Not something I'd say about the regulators toolkit.
Thank you very much.
Thank you.
I've got some more people asking. Richard, I've got Pauline first, then Richard.
Hi.
And then Charles.
The point there that Nick made about the test, I just wondered, I think it was Hyman's, wasn't it? So have they built anything on the back of potential gaps in LGPS knowledge? Do we know?
I can't answer, but I think the idea is that they are covering everything in the SIPFA toolkit for LGPS. I think they're covering quite a lot of the TPR stuff as well, but hopefully not in the same detail as the TPR would, because that's very specific to the code of practice. But what they will also be doing, they'll also be issuing hot topic type training modules. So say, for example, if McLeod comes up, they would do something on McLeod or things like that. So I think it should be quite reactive to what's going on to give everyone a good grounding. But with us, I mean, I think that they most probably use the assessments that they did to think, all right, yeah, there are definite areas, but I don't think those assessments gave enough insight as to what exactly it was that people didn't necessarily know. So I don't know. I can't answer that, but we'll have to see, I'm afraid.
Okay, thank you very much, Richard, and then Charles.
Liz, in regard to the Modern Gov library, you're going to bring report to committee, but are committee members expected to read all the background reports in the Modern Gov library?
I think the idea is that you most probably would want to flick through them like you do now, the committee reports. It's just that we might give a report with a big, huge appendix, but not actually refer to it in the covering report much. So, I mean, what's on there at the moment, for example, are the budget papers. So that would be a good one. It would be very short. It would be a couple of pages, if anything, of the tables, and just if there is an issue about an overspend or, well, particularly an overspend, that would have to come to committee. So that would be a good example. I think quite a lot of the investment monitoring stuff might go into the library, but the covering report would highlight. We've got to change our covering reports to make them sure that they highlight the strategic issues and anything of concern.
Okay.
We've got to see how it goes. That's why.
Can we be assured that all the pertinent issues are going to be put in the committee reports?
Yes, definitely.
Okay.
Anything that's strategic will be in a committee report, and any issue of concern or something that we particularly want to highlight will be in a committee report.
Thanks, Liz.
Yeah.
Okay, Charles. You're mute, Charles.
Chair, yeah. My simple thing is I'm concerned about access to modern gov, because they tried to give me access to this when I first became a member of the panel and it didn't work. So I want to be satisfied that the council's IT system will actually enable it, even though the pension fund may want it to, whether the council's IT system actually will work.
Yeah. Well, all I can say, I can't guarantee that, but we will be, that's why Jason and Ben and Tom will go out to each of you and make sure you have access. If people can't get access, then we have to rethink. It's as simple as that, really. You either all have to access it or you can't. We can't continue. So that's why in January we'll be doing that.
I know William has the same problem as me.
Yeah, we've got other people saying they have the same problem. So that's something we need to really make sure it's okay.
Definitely.
Have I got any further questions on this one? I've got no one in chat. I got no one waving at me. Right, can we go back to item 12 then, please?
Yes, by all means. Is Steve Turner on the call yet?
I don't think he's here. He should be with us in a few minutes.
Oh, it's okay.
I can cover.
I suppose, well, Nathan, if you want to, and Josh, if you can cover, if he doesn't get here in time, can you cover the impact investing paper then, please?
Yeah, absolutely.
Over to Nathan, I think. Yeah.
Yeah, there was only a brief point from me, and that was on Appendix 4. So committee are being asked to agree the changes to the investment strategy statement, which now includes the changes made following the equity allocation review, as well as references to the dynamic equity protection and the funding and risk management group. So nothing sort of contentious in there, just updating the language for the most recent strategic investment changes.
Right. Any questions? I've got nothing coming up in chat.
Great. So I think it's over to Josh in that case.
No one's waving at me. Okay, Josh.
Okay. So I was just going to cover briefly Q3.
Excuse me, Chairman.
Sorry.
Sorry, if you're talking about Appendix 5, I believe that's exempt. So you'd have to decide.
Yes, we're not into
All right.
Appendix 5 yet, but we will have to go into exempt. Yes.
Okay.
Right. Okay. Are we in? We're not in a. You're all right at the moment, Mark, are you?
Yes, we're okay at the moment to be in public.
Yeah, Josh.
Okay, so I was going to just briefly cover our Q3 committee investment performance report, which I have as page 161 of the pack. Just check everybody's on the same page there. So in terms of sort of broader market background for Q3 this year, it was fairly optimistic at the beginning of the quarter. We saw some strong returns from equity markets in particular, but then as the quarter went down, increased fears of a global slowdown led to a lot of volatility in markets, particularly in Asia Pacific and China with the restructuring of Evergrande. So sort of in that background, we saw a significant increase in forward-looking inflation expectations, and UK gilt yields rose also materially due to the signs that were coming out from central banks. In that context, what we've seen is positive performance from the fund's assets, more than offsetting the growth in the fund's liabilities, which increased largely due to those forward-looking inflation expectations increasing. So you can see on page 3 of our report, just under halfway down, we've estimated the funding level to have improved just over 101% as at the end of Q3. and over the last year increased by 8%. So encouraging to see that. Since quarter end, obviously, there's been a lot of volatility with concerns around the impact of Omicron. We've seen a lot of that come through in equity markets. But it is the dynamic equity protection that you've got in place is clearly working for you there as well. In terms of the risk position at the bottom of page 3, there was an increase in the value of risk to just over 1.2 billion, or just over 21% of the liabilities. That's not really due to any shifts in the portfolio or any of our assumption. It's more about the increase in the absolute value of the assets. So as that increases, the monetary amount of the value at risk just naturally increases by the way the measure is calculated. But importantly, on the second bullet point, as a proportion of your liabilities, your risk has decreased over the year, which is largely due to the dynamic equity hedging options that you've got in place. So what that does is that reduces the, in a downside scenario, if equity markets were to fall materially, that protection would kick in, and therefore under the modeled modeled analysis, you wouldn't be suffering the full impact of those falls. Just over the page, looking at performance. So as I said, most asset classes were generally positive over the quarter, with the exception of government bonds and Asian and emerging market equities, particularly your LDI portfolio, which, given the inflation exposure, delivered 18% over Q3, and actually over the year has delivered 49%, which is clearly a significant return, really highlighting the scale of the protection that you've got in place there against increases in the value of those liabilities. Moving on to relative performance, so in terms of how things have done relative to your benchmarks, the fund has underperformed the total strategic benchmark, mainly due to the fact that you've got the equity protection strategy in place. So when equity markets are rising, that is causing a slight drag on returns, just by nature of the cost of having that in place, the sort of foregone upside that pays for the downside protection that you've got there. That's all very much as expected. So we've got no concerns about the overall strategy or any of the individual portfolios off the back of that. Just moving down the page to about halfway down to asset allocation and strategy. It's pleasing to note that the first capital call has been received from the private debt fund with Brunel. And generally the asset classes were all within their rebalancing ranges, except for the renewable infrastructure and private debt, which are being drawn down. So we wouldn't expect those to be at their target levels just yet. And as has been mentioned, post the quarter end, there was the agreement to terminate the dedicated emerging markets equity allocation. And from a strategic perspective, that's been rebalanced between the Brunel global high alpha and sustainable equity mandates. In terms of the liability hedging portfolio that you've got with BlackRock, they were in compliance with all of their guidelines during the quarter. No triggers have been breached. But your inflation hedge ratio was below the target, which, as a reminder, is 45% of the assets. That's due to the liability benchmark being updated. So we've rerun that liability benchmark, and it's basically the inflation sensitivity of the liabilities has increased as a result of market conditions, and therefore the assets that you hold are hedging a smaller proportion of those. That's on the agenda to be discussed with the financial risk management group in due course. Just see that there's a hand raised there. Is that a question from Richard at the moment? I think it's muted there.
No, it wasn't a question, no.
Oh, sorry, okay.
I've taken the hand down.
Okay. In terms of the actually option protection strategy that you've got, it did have a negative market value of 5 million as at 30th of September, which is just a function of the fact that, as I said earlier, equity markets have risen. So those equity options which are protecting you on the downside have fallen in value and have a negative mark-to-market value, particularly over Q3, given the volatility in emerging markets, that they have protected you. And we did see that come through in the quarter, which was pleasing to see. And then finally, just the collateral position within that BlackRock fund that they hold on your behalf. Just to reel off those figures there, could sustain a 2.9% rise in interest rates, which is a strong collateral position to be in, an 11% fall in the value of the options, or a 0.4% fall in inflation before any triggers were breached. So, clearly that collateral position is strong. We're comfortable with it, but the financial risk management group will be keeping that under regular review as well. That was all that I had to go through on our performance report, unless there's any questions.
I haven't got anyone coming through on chat with questions. I've got no one waving at me. So no questions at the moment.
That's fine. I think Steve Turner has arrived. So I think it would be timely to go, if we could go through the impact paper, which I think was for by Steve Pearce at the last committee. We have to.
Are you there, Steve?
Yeah. Is this paper? I think this paper is in private.
Yeah, we need to move into exempt.
Right. Can you move out? Can you move the exempt motion, please, Liz?
Mark, can you do it?
Chair, it's really for you as a committee to decide to do that. I can read the wording if you wish.
All right. Okay. I think I've got the wording somewhere here. Right. The committee, having been satisfied that the public interest will be better served by not disclosing relevant information, proposes, in accordance with the provisions of the section 100A4 of the Local Government Act 72, that the public should be excluded from the meeting for this item of business because of the likely disclosure of exempt information as defined in paragraph 3 of part 1 of schedule 12A of the Act as amended. I've so proposed. Can I have someone second that?
I'll take a second, Chair.
Is anyone against that? We've got no one in chat. So that is proposed and seconded. So we're now in exempt. So if anyone is in public session, I'm afraid we're having to close off now.